He didn't build one crypto company, he connected them all. News, lending, investments, everything depended on the same network. Then one crack destroyed everything.
He owned the news outlet that covered crypto. He owned the lender that funded crypto firms. He owned the asset manager that held crypto. He sat at the center of everything. When it all collapsed in 2022, he was at the center of that too. This is Digital Currency Group. Before FTX there was DCG, and before Celsius there was DCG, and before Genesis there was DCG, and before almost everything that mattered in the institutional cryptocurrency world, there was Barry Silbert and his company Digital Currency Group, and at its peak DCG was the most powerful conglomerate in the entire crypto industry, and it owned the companies that everyone else depended on, and it sat at the center of the ecosystem like a spider at the center of a web. And when the web began to collapse in 2022, DCG collapsed with it. And the question that investigators are still asking today is whether Barry Silbert knew exactly how fragile the web was while building it higher and higher, and that is the story we are going to tell. Barry Silbert was born in 1976 in Maryland, and he was not a tech founder in the Silicon Valley mold, and he was a financier, a deal maker, someone who understood capital markets and investment structures in a way that most early crypto enthusiasts did not. And before Bitcoin, he had founded a company called Second Market, which allowed investors to trade shares in private companies before they went public, and this made him wealthy and well-connected. And in 2012, when most serious financiers were still dismissing Bitcoin as a joke or a scam, Barry Silbert was buying it, and he was taking it seriously, and he was building infrastructure around it. In 2015, he founded Digital Currency Group, and the strategy was simple and brilliant. Instead of betting on one cryptocurrency or one company, DCG would become the holding company for the entire industry, and it would invest in and acquire the most important infrastructure businesses across the whole ecosystem. And over the next 7 years it did exactly that, and the companies it owned or had invested in included CoinDesk, the leading cryptocurrency news outlet, and Grayscale Investments, the largest digital asset manager in the world, managing tens of billions in Bitcoin and Ethereum trusts, and Genesis Global Capital, the oldest and largest institutional cryptocurrency lender, and Luno, a retail crypto exchange serving millions of customers in emerging markets, and TradeBlock, a crypto data and analytics company, and dozens of other businesses across every corner of the industry. DCG was not just an investor in crypto, it was the architecture of crypto, and when institutional money wanted exposure to digital assets, it often went through Grayscale. And when institutions wanted to borrow or lend crypto, they went through Genesis. And when journalists wanted to cover crypto, they read CoinDesk. And when retail investors in Africa or Southeast Asia wanted to buy crypto, they used Luno. And DCG was collecting revenue and influence from all of it simultaneously. Barry Silbert became one of the most powerful figures in the entire financial technology world, and he cultivated the image of a visionary investor who had seen the future before anyone else. And there was real truth in this, because he genuinely had been early and he genuinely had built something remarkable, but the structure he had built contained a fatal flaw that would not become visible until everything was already falling. The flaw was Genesis, and the relationship between Genesis and DCG was not a clean arm's-length investment relationship. It was something far more entangled. Because when Genesis made loans, it was not operating as a completely independent institution. It was deeply connected to the broader DCG ecosystem, and when Three Arrows Capital collapsed in June 2022 and Genesis lost $2.3 billion in unrecoverable loans, the response from DCG was to inject $1.1 billion in emergency capital into Genesis to keep it alive. And this injection was not a straightforward cash transfer. It involved a promissory note. A promise by DCG to pay Genesis $1.1 billion over 10 years, and creditors would later allege that this structure was designed to make Genesis appear more solvent than it actually was, to buy time, to prevent the immediate collapse that might have revealed the full extent of the problem. When FTX collapsed in November 2022, Genesis was hit again, and this time there was no emergency injection large enough to save it, and Genesis froze withdrawals, and the 340,000 Gemini earn customers who had lent their money through Genesis found themselves locked out. And Cameron Winklevoss, co-founder of Gemini, published an open letter addressed directly to Barry Silbert accusing him of bad faith, of deliberately delaying negotiations, of using DCG's position to protect DCG at the expense of Genesis creditors. And the letter was extraordinary in its directness and specificity, and it forced a public confrontation between two of the most prominent figures in the crypto industry. Barry Silbert denied the allegations and DCG denied the allegations, and the negotiations continued through lawyers and bankruptcy proceedings. And in January 2023, Genesis filed for bankruptcy with $2.8 billion owed to creditors, and the bankruptcy proceedings that followed were among the most complex in cryptocurrency history, because DCG was both a creditor of Genesis and the parent company of Genesis, and untangling those relationships and determining who owed what to whom took years of legal proceedings. The Department of Justice and the Securities and Exchange Commission both opened investigations into DCG and Barry Silbert personally, and investigators focused particularly on whether the $1.1 billion promissory note structure had constituted fraud on Genesis creditors, whether it had been designed to deceive, and whether Barry Silbert had made misrepresentations about DCG's financial strength in the period when Genesis was trying to survive. As of mid-2025, criminal charges had not been publicly announced against Barry Silbert personally, and DCG continued to operate in a reduced form, having divested several assets including selling CoinDesk and winding down various subsidiaries, and Grayscale continued to operate though under significant regulatory and market pressure. In August 2024, Genesis reached a settlement with creditors agreeing to distribute approximately $4 billion, a figure that exceeded the original claim amount, because the value of cryptocurrency assets had risen substantially in the intervening period, and some creditors ultimately recovered more than they had originally deposited, though this varied significantly depending on the creditor category and timing. So what is the real lesson of Digital Currency Group? And Barry Silbert built something genuinely impressive, a diversified holding company that brought institutional infrastructure to an emerging asset class and created real value for millions of people, and he was genuinely early and genuinely right about cryptocurrency in ways that most serious people were not. But the structure he built created a conflict of interest at its very center. A parent company that owned the lender that lent to the traders that traded on the exchanges that generated the fees that funded the parent company, and when one part of that chain broke, in this case when Three Arrows Capital failed to repay Genesis, the entire structure was tested in ways it had never been designed to withstand. The lesson of DCG is not simply that Barry Silbert was greedy or deceptive, though investigators continue to examine those questions. The lesson is about what happens when concentration of power in a new industry is allowed to develop faster than the regulatory and oversight frameworks that exist to manage conflicts of interest, and when the most powerful single actor in an ecosystem is simultaneously investor, lender, media company, and market infrastructure. The potential for those roles to conflict is not a theoretical risk, it is an inevitable one. That is the capital case. Subscribe to the capital case because the next case is already waiting.